Sir, shall I start the program, sir? Okay, thank you. Good evening to our resource person, Sri L. Jayaraman sir, and other managing committee members, fellow members. Very good evening to one and all. I welcome you all for the second day of 5 days virtual series of CPA programs, part 2 on the subject private limited companies under the Companies Act 2013. Hope you have got clarified all the doubts on various issues involved in accounts and audit yesterday. Today, Jayaraman sir is going to deal with very important topic, directors and resolutions. I request Jayaraman sir to please present upon the topic. Thank you.
So thank you very much, Shireen. Very good evening for all the delegates. So continuing the discussion where I left yesterday, we were discussing appointment of auditors. We saw that the first auditors must be appointed by the board within 30 days. Thereafter, general meeting has to appoint. And they will hold office up to the conclusion of the first general meeting, AGM. Similarly, casual vacancy auditor, other than resignation, board will appoint. If it is by resignation, board will appoint and the matter has to go to general meeting. And they also will hold office up to the conclusion of the next AGM. Then we saw that once we move to the AGM, thereafter the auditors has to be appointed and they will hold office for 5 years from the conclusion of this AGM to conclusion of 6th AGM, that is for a period of 5 years. Then we divided the companies into two categories, smaller one, bigger one. I'm not saying small company, smaller one. The same auditor can be reappointed for another 5 years, like that it goes on. But for certain bigger companies, the concept of rotation of auditor is there. So in bigger companies, if an individual is appointed as an auditor, he will hold office only for 5 years. Thereafter, there has to be a cooling period of 5 years, and like that we discussed. But whereas firm is appointed as the auditor in case of bigger companies, now the firm can be appointed for 5 years, they can be reappointed for another 5 years, then the cooling period of 5 years. Like that, we saw the rotation of auditors. Now, reappointment of retiring auditor at the AGM. Now, except in cases because of rotation that the existing auditor has to go home, in all other cases, the retiring auditor may be reappointed at the AGM. That is, in other words, for smaller companies, 5 years is over. Then bigger companies, individual is appointed as auditor, this will not apply. Then bigger companies, firm is appointed as auditor after 5 years. So in that cases, the retiring auditor only must be reappointed unless he is disqualified for reappointment, or he has expressed his unwillingness, or some other person is appointed in his place by passing a special resolution, that is special notice method. Or you passed a resolution, the retiring auditor shall not be reappointed, except in these cases. Now, the retiring auditor only must be reappointed. Where no auditor is appointed or reappointed, the existing auditor shall continue. These are all the new provisions which have been introduced in the 2013 Act. So, if you give special notice and appoint some other person as the auditor, let the members take the initiative. If no initiative is done and you are not passing a positive resolution reappointing the retiring auditor, then the retiring auditor will continue. Removal of auditor. How do you remove an auditor? The Act talks of stringent provisions. Yesterday in the fag end of the class, I was telling you that to safeguard the auditor's independence, enormous provisions are there in the Companies Act. Very frankly speaking, if the auditor will not compromise I'm sorry for the language, if the auditors will not compromise, the auditors can put both the fingers into the eyes of the promoter and rotate. So much of powers the auditors have. You can just take these people into task, the promoters and the board of directors. No love lost. After all, they are dealing with the public money. We will go as per the rule of law. No threatening. I'll throw you out. You cannot touch me. If you want to remove an auditor before the expiry of the term, special resolution has to be passed, overwhelming majority, and the previous approval of the central government also is to be obtained. Central government is not going to give the approval unless some malified intentions can be attributed on the auditor. So practically touching an auditor is impossible. So if you want to remove an auditor, first they have to pass a board resolution. Then they have to go to the central government and get the approval done. See, after the central government approval only, general meeting has to be convened within 60 days and it can be removed. See, you can't convene a general meeting and then go to central government for approval, because if for example, because central government, that procedure has been clearly given. Only when the central government is convinced, then shareholders also is to be convinced. In a scenario where central government has given the approval to remove the auditor, shareholders don't give the approval, then the matter ends there. Both has to be complied with, central government approval as well as the shareholders approval, both has to be complied with. Then before you remove, reasonable opportunity to be heard must be given. Then comes the resignation of auditor. Very, very minute provisions have been incorporated in the Act. You find very, very minute provisions as such. The auditor who has resigned shall file ADT3 to the company as well as ROC within 30 days of resignation. Whose duty? Resigning auditor's duty. And look at the fun. He should state the reasons and other relevant facts. Very interesting. At the first instance, why will the auditor resign at all? Is he a fool? So definitely, it could be reasons of non-cooperation from the board of directors, intimidation by the board, and something like that. So if you are resigning for personal reasons, matter ends there. But if you are resigning because of these reasons, it's a very serious case. So what is he saying? Let the government come to know. Come on, in the resignation letter itself, you give the reasons and the relevant facts. If you are resigning for personal reason, fine. Otherwise, the government is going to take it very seriously. So give it in that ADT3 form itself. Then, see, penalty is prescribed for this. Though they have revised the penalty and these are revised figures, if the auditor does not file the statement, he will be liable to penalty of much 50,000 or amount of remuneration, whichever is less. And continuing default, further penalty 500, maximum 2 lakhs. Earlier it was 5 lakhs, they have reduced to 2 lakhs. So they are very particular that, you have to resign and file this with the ROC. So, I mean, let the auditor tell the reason. Hold your head high. You don't have to bother. No more intimidation. No more. You call a spade always. The next step. Appointment of auditor in the AGM other than retiring auditor. Now, please see. What is the special notice concept I told you the other day? Members only will take the initiative. For 4 items, special notice is required. 14 days before the meeting, 7 days before the meeting. All that explained in one of the earlier class. Now, special notice is required only for 4 circumstances. Appointment of a person as director, other than retiring director, we discussed section 160, along with the deposit of Black and all. Then removal of director, we are yet to discuss. Oh, sorry, even appointment of director, special notice today we'll be discussing. Okay. Then third one, appointment of a person as auditor other than retiring auditor. Appointment of person as auditor other than retiring auditor, and resolution expressly providing retiring auditor shall not be reappointed in these 4 cases. So the moment they say special notice means board will not take initiative. 14 days before the meeting, the member will take the initiative, specified members, and 7 days before the meeting, the copy of the special notice has to be given to all the members. If it is not possible, newspaper advertisement. So appointment of person, so members taking initiative. So special notice has to be given. Then other procedural aspects also we have to follow. Take a certificate from the auditor and all. The old auditor principles of natural justice has been complied with. Then at the AGM, the new auditor has to be appointed by special resolution because you are replacing the new auditor. Fine. Then no special notice is required if that 5 years, 10 years comes to an end because company only will take the initiative. Then your MGT 14 has to be filed with ROC. The listed company inform the stock exchange. Now please see this very carefully. When will the members get an opportunity to appoint their persons as auditors? Let us practically understand. First auditor is appointed by the board. Or if not, then general meeting will appoint. There also he won't take the initiative. Board only will take the initiative. Casual vacancy auditor is also appointed by the board. Right. Then in the AGM, it is only the company will take the initiative and appoint the auditor. Then similarly, that 5 years term is over, then 10 years term is over, company will take the initiative to appoint the auditor. Practically through special notice method, when the members can take initiative. If you carefully look at all those points, in case of the smaller companies where no rotation of auditors is applicable, after 5 years, the members can take initiative and replace the auditors with a new auditor. This is for smaller companies, the period of 5 years is over. Come to bigger companies. In bigger companies, individual is appointed as auditor. After 5 years, anyhow, that rotation will come, board only will take initiative. So in bigger companies, in case of individual appointed as auditor, members have no role to play. In case of bigger companies, when a firm is appointed as auditor, after 5 years, come on, the members can take initiative to replace the auditor with another auditor. So now they have made it very clear all these points. Removal of auditor by the tribunal. After all this Satyam episode, the tribunal suo moto or an application from the central government, any time they can throw out the auditor. If you have conducted in a fraudulent manner or colluded in any fraud with reference to company directors or officers. Look at this one more point, very interesting. Now, where, please see, when application has been made, the tribunal has to dispose of the application within 15 days. When the application is made by the government, the tribunal cannot sit over the application for longer time for the removal of auditor. Just 15 days, just make an order. Within 15 days, please make an order that you will no longer continue as the auditor. So time bound the program, very interesting point. Then once the tribunal has thrown out an auditor, you cannot act as auditor for any other company for a period of 5 years. And you are liable for action under fraud under 447, imprisonment, minimum 3 years to 10 years, all those terrible things. Of course, here in the clause for the removal shall also include. Now, for example, the other day I told you, if Srinivas and Gopal Krishnan are the culprits in PwC, this action will be against Srinivas and Gopal Krishnan plus PwC. So in PwC, other people will not be liable. Other partners will not be liable. This we discussed the other day also. Now, quickly running through qualification of auditors. You all know you must be a chartered accountant and holding a membership and certificate of practice. And very interesting point is, in a firm of chartered accountants, majority partners only need to be chartered accountants now. You can have mega firms, other partners can be company secretaries and other. Previously, any CA firm, all the partners must be the chartered accountants. Now it is not there. So only if the majority out of 9, 5 are chartered accountants, then that firm can be appointed as auditor. Then in that case, LLP is also can be appointed as auditor's qualification. So for LLP, though it's a body corporate, it will not be treated as a body corporate for the purpose of appointment. So LLP also can be appointed as auditors. Now, only thing is, if a firm or LLP is appointed as auditor, naturally, only the chartered accountant only has to sign on behalf of the firm. Next, he must hold a certificate of practice. This is fine. These are basic things, so I am going a bit fast. Disqualification of auditors. Please understand, this disqualification of auditors will arise not only at the point of appointment of auditor, will continue throughout the tenure of auditor, unlike in case of director, which I'll discuss slightly later. So you have to see the disqualification at the time of appointment plus during your tenure as the auditor. First, body corporate cannot be appointed, officer and employee cannot be appointed. A person who is in partner, he cannot be appointed. These are all the old points which were there for longer period of time. Now come to the new points. A person or his relative or partner. I suppose I am going to be appointed as auditor. I and my relatives and other partners, okay, they should not hold, not only me, my relatives, my partners must not hold any security. Suppose I am going to be appointed, say, for the fun of it, in Nagarjuna Fertilizers and Chemicals Limited, my relatives and partners must not hold any security, not shares. He used the word security, broad term. In Nagarjuna Fertilizers, in Nagarjuna Holdings Limited, in Nagarjuna Agri-Chemicals Limited, and subsidiary of the other holding company, that is Nagarjuna Finance. There's one small exemption. The relatives may hold shares not exceeding 1 lakh rupees face value. In case the relative acquires more than this 1 lakh, you must take corrective action within 60 days. That is, you can sell them. Similarly, I and my relatives, all these people should not be indebted to all these companies more than 5 lakhs, or I should not have given a guarantee or security for the indebtedness of third party in excess of 1 lakh. Then a person or firm directly, indirectly, who has business relationship with the company, subsidiary, holding company or subsidiary and all that. Very interesting. I should not have, not only me, a person. So the whole thing, please see, this I, my relatives, my partners, they should not have had business relationship with the company, subsidiary or holding company. Then I cannot be appointed as auditor. What is business relationship? There are some clarifications. Suppose I am appointed as sole selling agent. It's a business relationship. Or these people are dealers, distributors, wholesalers. These are all business relationship, special kind of business. But these people, if they render professional services, come on, they don't come under business relationship. And one more very important clarification is, if any transaction is done at arm's length price in the ordinary course of business, is also not business relationship. Otherwise, people start interpreting in a different way. Or let us say, I'm going to be appointed in a TV company as the auditor. If my relative or anyone has purchased the TV, you can say it's a business relationship. No, if you go to a shop and purchase arm's length transaction, then probably it will not come under the definition of business relationship. Then a person whose relative is a director on employment or KMP. So I'm going to be appointed as auditor in Nagarjuna Fertilizer. I and my relatives, none of them should be a director or employee in Nagarjuna Fertilizers. Then a person who is this is very important now. How many companies an individual can act as auditor? Not more than 20 companies. But there is a lot of gateway. In calculating this 20 companies, 1-person company, small company is a private company where paid up capital does not exceed 50 lakhs, turnover does not exceed 2 crores, dormant company, and private company paid up capital less than 100 crores. So very important that almost 99% of private companies are less than 100 crores only. All that will not come into calculation. I remember in the earlier Companies Act, CA Institute came with another notification that overall limit of all companies put together, 30 companies, that limit has been removed. If they have put any other limits, I'm not aware of it. Otherwise, today, you can be an auditor for any number of private companies, small companies, one-person company, dormant company. So the public companies and private companies more than 100 crores, the limits per person is restricted to 20 companies. Then, a person who is convicted from the court for fraud, a period of 10 years has not elapsed. See, if you're in fraud, you cannot be appointed as auditor. Then you are engaged in other specialized services in 144, which we'll discuss. You cannot become the auditor. Vacation of office of auditor. So a person appointed as auditor incurs the disqualification after. So not only at the point of appointment, thereafter also you shall vacate your office. Remuneration of auditor. See, each and every point they are provided. So to ensure the safeguard, to ensure the independence and the safeguard of the auditors. So the appointing authority, the board appoints the first auditor, they'll fix the remuneration. Then the general meeting appoints the auditors, the general meeting, or they may authorize the board. See, sometimes what happens, based on number of vouchers or some other parameter, my remuneration may be distributed. In such cases, the general meeting would authorize the board on the parameter on which remuneration has to be fixed. So therefore, the board cannot play with the auditor on the area of remuneration also. Auditor expenses should be included. This is very, very important. See, when I say remuneration, it includes the auditor's expenses. Many of them have forgotten these basics. Suppose I pass a resolution like, resolve that ABC Associates, Chartered Accountants, B&D is hereby appointed as statutory auditors of the company to hold office up to the conclusion of 6th annual general meeting of the members of the company on a remuneration of 5 lakhs per annum. If you simply say 5 lakhs per annum means it includes expenses. You must say and reimbursement of out-of-pocket expenses on actual basis. The resolution must specify that. Otherwise, it is general implication that remuneration includes the expenses. Right. Then, powers and duties of the auditors and auditing standards. Rather than powers and duties, I would say what are all the areas the auditors has to report. Let me quickly run through. You might have gone very deep into this. Only some of the issues which of more relevance I will touch upon because time is the biggest constraint. Auditor has a right to the books of accounts. At any time, the word used is, now can the promoter say, let the financial year be over, then after that you please come and audit the accounts? No. During the financial year, the moment I'm appointed in September, from October also I'll start doing the audit. I will do it and keep with that. So you cannot stop me. Anytime I can right to access to the books of accounts and all that. So anytime, that is the wording used. Then report to the members. The auditors are to report to the members. Please understand, I have no connection with the board of directors. Board of directors cannot threaten me. I am not answerable to the board. But board has to give all information, explanation required for the purpose of audit. Now, reporting to the members does not mean I have to individually forward the report to all the members. I will address the report to the members, give it to the board of directors. It is their duty to send it to the members. Then, right to receive information explanation. If you carefully look at 3 sections, I'll come to that point later. One of the points which you are reporting is whether the auditor has received all the information explanation required for the purpose of audit. Sir, anyhow, I am giving a positive report. So it is understood I have received. No. A positive report without qualification is a different issue. Whether you have received information, because your entire audit is based on information explanation received by you. You are not doing any investigation. You are just doing audit. Whole audit is based on information explanation. You are a watchdog, not a bloodhound. Tomorrow, if it turns out they have not given you information explanation, the board of directors and all, it's an audit in waste. You have just wasted your time. For example, a particular voucher, you go and ask him, what is this rent account? The accounts officer may say, we have got a marketing office. This is about 2,000 square feet, and we are paying a rent of 50,000. Then you ask for the rental agreement. That's all. You mean to say you'll take a car and verify whether they have got office? No. The whole audit is based on information and explanation. So it is not a efficiency audit or CAG audit. So if they have not given the information and explanation, your audit is an exercise in waste. So he is saying you have a right to get all the information and explanation. So what I'm trying to say, the board of directors or some of the director or finance manager cannot say, sir, whatever you want to write, sir, you don't come and disturb. Array, whatever I want to write, I will write. You don't have to tell. Very interesting point it is. When I ask something, you stop all your work and give me all the information explanation required for the purpose of audit. Duty to inquire. I've just quickly run through. A duty to inquire means only when there is something negative, you have to report. Otherwise, you can just forget it. Whether the loans and advance made has been properly secured. Many of us have not understood this. We are just blindly going through. I'll spend some time on this. First, loans and advance made by the company, not received by the company. So in the asset side in the balance sheet, the company has given some loan or advance, and they are saying below that they will write secured over the assets. What impression the shareholders get? Oh, they are secured. But then if you go to the terms and conditions of security, it is terrible. Only 50% is secured, and the repayment terms are terrible after 20 years. This is where the auditor has to see. When they are secured, whether they're properly secured. What is the rate of interest? What is the security cover? What is the repayment terms? Whether they are prejudicial to the interest of the company and members, then you have to report. Because shareholders feel that 25 crores loan has been given and they write secured over the assets. Please give them more details. It is the auditor who plays a role here. Then transaction represented by mere book entries are prejudicial interest, no supporting papers, and they are just prejudicial to interest. It is a broad term. It could be anything. No supporting papers or no factual facts, all that. Then next interesting point is, if a company is not an investment company or banking company, whether the assets consist of shares debentures have been sold at a price less than they are purchased. Many of us are missing this point. You are not a banking company. You are not an investment company. You are a manufacturing company, software or trading company. Then you have no business to buy and sell shares. For some reason, you have sold the investment. Did you sell the investment at a loss? Yes, you have to report. Sir, I purchased it for 25 lakhs. I just sold it for say 24 lakh 20,000, small loss of 80,000. Had the company not sold it earlier, it would have been disastrous. All that you keep quiet. Shareholders will decide. Your duty is no indexation and all. You are a non-banking finance company. You are a manufacturing or software company. Did you sell the investment at less than the price at which they purchased? If the directors have sold, come on, report. That's all. Whether loans and advances are shown as deposits. See, there are some technical difference between loan and deposit. In case of loan, the liability to return the money arises from the date of loan, even though you're given for 3 years and all. If it's a deposit, only from the maturity date, the liability will arise. So when you say, actually they have given a loan, but they are writing the balance sheet as deposit, it gives a wrong impression to shareholders. Please report. Personal expenses charged to revenue account. This happens mostly in case of private companies. You know better. I don't have to tell anything. Then you have to be very, very careful in allotment of shares. When shares have been allotment, whether cash is actually received. What do you mean by this? Now we saw that allotment for cashman checks. Those checks have been encashed or not, you must see. This is one area. They just pass a book entry and then the application money is sent by the directors or someone is not encashed, lakhs of rupees, and is just going into the showing in the bank reconciliation statement. Please go through all this very clear. So in case you have made any allotment other than shares for consideration other than cash, then For what? Is there an agreement whether the position is correct and not misleading? Who has done you have purchased land, buildings, plant and machinery, and they have sold it and they have passed a resolution to sell to that person for 5 crores. Come on, we show the agreement. Who has done the valuation? Go through all this, particularly this allotment of shares for cash or even consideration. Other cash, auditor has a special role to play to inquire. Then you have right to access of the records of the subsidiaries also. Then in the audit report, previously what we used to say, in accordance to the information explanation given to me, the best of my knowledge and belief, all that has gone. Now look at the language which you are saying when you are drafting the audit report. You are saying that the auditor report on every financial statement, on every financial statement laid before the company in general meeting, and the report taking into account the provisions of the Act. So what I'm saying, I've gone through the Companies Act completely. As far as the financial statement is concerned, they have complied with all the provisions. They have complied with the auditing and accounting standards, and matters which are to be included in the audit report, thorough report, this report and all, or in the rules made thereunder, or any order given in subsection 7. So I'm saying it gives true and fair view, taking into account all these parameters. Then, to the best of information knowledge, the financial statement give true and fair view, of the company's affairs at the end of financial year, and the profit or loss, and the cash flow, and other matters. This is the wording which you use normally. So enormous responsibility on the auditor. Now there's one interesting point. Auditor is only reporting to the members. But this concept gets diluted to a great extent today. Now, a question arises, is audit report a public document? There was some old case laws that said privity of contract, the outsiders cannot sue the auditor. Now with all the new provisions and particularly class action suits, privity of report is gone. A bank, financial institution, an outsider, any person who relies on the audit report, he can also sue to the extent allowed in the Companies Act. So the old concept that audit report is not a public document, it is only meant to the members, meant only for the members, has got a very, very limited application today. So others also can depend on the audit report, and they find any fraud and all, they can sue the auditors. The audit report shall also state, whether positive or negative, you have to state, well, I have obtained all the informational explanation. This is what I'm telling you. You have to specifically say, did you receive the complete cooperation from the officers and directors of the company, yes or no? Whether proper books of accounts required by law has been kept. Which law? He never said Companies Act. Any law. For example, under GST or under Labor Acts, some registers will come within the definition of books of accounts. Whether those books have been properly kept is what the meaning is. Yes or no? And you have the next one. Whether you have received any branch report that has been properly dealt in our report, then the balance sheet and P&L account are in agreement with the books. What is this? What is this? There's a small distance between cup and lip. Of course, now online goes on, but otherwise those days when you maintain the physical form, the books of accounts, the assistant prepares the trial balance. From trial balance onwards, the auditor will start his work to check up the balance sheet, P&L account and all. Now, some unscrupulous companies, what they do, they just change the trial balance. And the auditor thinks that he will, that's why that trial balance where the checking has been done by the auditor assistant, only that trial balance you must take and see. See, there are many cases where we found that from the trial balance we have put a tick and the P&L account balance sheet is fine. But when I see some balance sheet figures, it is different from the ledger figures. This is the distance. Some of the auditors, what they do, when they go for finally signing the report, they'll ask the ledger and they will start ticking some of the important figures, land account, plant and machinery from the ledger. You as account assistant, sometimes when you are doing audit, when you are doing articles, you will be feeling very bad. I've burnt the midnight oil and I've gone through. This auditor, as if he's a great man, is that checking some figure? No, he's ensuring that point, whether the company's balance sheet or that. Because tomorrow something goes wrong, the auditor is totally responsible. So don't do directly from the trial balance. So be careful in all this point, because you are certifying it, whether you are complied with the accounting standards. Yesterday we saw in the board also has to give in the director's report they have complied with accounting standard and the deviation, and now the auditors has to certify. Then observation comments on financial transaction which has adverse effects on the functioning of the company. This it all depends on facts of the case. The board of directors have given some loan, but in my opinion, I think this loan is not in the best interest of the company, in my opinion. Then I can bring it to the knowledge of the shareholders, nothing wrong. Any particular financial transaction which will have adverse effects depends on facts and circumstances of the case. And today we'll be discussing, because of the 164(2), whether the directors have been disqualified, that the auditors have to see and report. Then any qualification, reservation, adverse remarks to the maintenance, all other matters, your qualified report, you have to give it in the audit report, whether you have adequate internal financial control systems. These are the things where you have to, even if it is positive or negative, you have to report. Then where the company has disclosed pending litigations, these are given in the rules, hundreds of litigations, you please disclose. Then when the company has made any provision for foreseeable losses in long-term contracts and derivative contracts, and delay in depositing investor education protection fund, yesterday I discussed. So you have to go through that carefully, and there are delay, you have to report in the audit report. And then you're not just writing the audit report, they have not complied or that. What is the reason? You have to factually report with lot of details. Then branch audit, branch audit also can be done by the company's auditor or some other branch auditor. And the branch auditor is subordinate. He has to send the report to the company's auditor. It is the company's auditor who will be ultimately responsible. All those small points. Then come to auditing standards. Now, just as accounting standards, there are a lot of auditing standards. The basic work, it is done by the CA Institute. Then NFRA approves the NFRA will go through the auditing standards and finally approved by the central government. So auditing standards also quite a lot of come, like accounting standard, they are also made mandatory. Reporting of frauds by the auditor, very important. They have divided the frauds based on the amount. If any fraud, when the auditor is performing the audit, he has reason to believe the fraud is 1 crore or more. The amount of fraud involved is 1 crore or more, then very important, you must immediately report to the central government within 60 days. Sir, I will write in the audit report is secondary, that we'll see later. If you have sufficient reason to believe any individual or officers of the company are committed a fraud of 1 crore or more, within 60 days after it comes to the knowledge, you have to report to central government by following a procedure. Immediately or within 2 days, you first report to the board, asking them to reply within 45 days. If they give the reply, excellent. Then within 15 days, they have to give within 15 days. If they don't give also, then within 45 days, you have to forward the report to the central government along with the note that they have not replied. Then in respect of other frauds, where the amount is less than 1 crore, then the auditor should forward to the audit committee if it is there, otherwise the board within 2 days, specifying these are all the fraud, this is the amount, these are the parties involved at all. Then what remedial action they have taken, the auditor, the board will report to the company in the director's report, which we discussed yesterday. So this is how the frauds reporting also has to be done very carefully. Now, when you report to the government, you see ADT 4 is the form, register post acknowledgement, you confirm by email, report of the auditors, signed by the auditor, giving his membership number. So minute details they have given in the rules as such. So all these provisions of audit will also apply to cost auditor and secretarial auditor in the performance of the duties. So all these sections will apply to them. That's all. An auditor should not do all these services. So gone are the days where we do a lot of services. Now all that you cannot do in the company, in the subsidiary company or holding company, accounting services. See, these are all very important things. So naturally, when you do the accounting, what audit you'll do, your own things, you are doing it. So even small private company, please see that you don't do all this service and don't charge. If you are caught, it will be a very serious thing. Then internal auditor cannot be statutory auditor. You should not design the financial information system because you are reporting the effectiveness of the system, actuarial services, rendering of outsourced financial services, management services you cannot do. Now, a big controversy raised. Can the auditor do tax audit? Can the auditor of the company do tax audit? A predominantly number of people says, yes, we can do it. But there are few cases where they said, even tax audit, it's a combination of statutory and management services. Anyway, now it is well settled. I don't know, I have not seen any case law and all that. So there is no action taken. The statutory auditor can also do tax audit. That has been permitted, right? So then you cannot directly or indirectly means in the name. For example, Deloitte has got many companies under the brand name, and similarly KPMG and all that. Under that name also you cannot give to another subsidiary firm and all these kind of services to be performed, right? Then auditor has to sign and read the audit report. This is a very interesting point. See, the qualification observation comments which have adverse effects on the functioning should be read out. In the older Companies Act also this point was there. Now, most of the general meetings we have seen, AGMs and all, they have no patience as such. So what the members used to say, come on, we'll take it as read. But there's a point there. See, what is the guarantee that audit report which was given to the board of directors, to the company secretary only was sent to the members? In explicit language, we cannot write this. These are subtle language. So he says, come on, you have to read out. And you have to read out not from the printed report, from your report which is there in your hand, you have to read out. Only that adverse portions and all that. And open for inspection by any member. So I have seen they are keeping that printed copy. No, that copy which the auditor has given to the board or the company secretary, that copy is open for inspection for cross-checking purposes. Then unqualified report obviously need not be read out. Auditors must attend the meeting. These are new provisions. All general meetings the auditor must attend, and auditor can speak in connection with their audit. So now you have to, so now, or you send your representative who is also qualified to be an auditor. You cannot send your audit assistants and all that. But many of you are, unless the auditor is exempted by the company, it is senseless. When you make a provision, auditors must come and attend the meeting and answer to the members. That makes sense. But then they can be exempted. Today, what is the problem the auditor is facing? Now, last day for AGM, most of the companies are 30th September. So in 30th September, if about 40-50 companies hold the AGM, and most of them hold at the same time, 11 o'clock, 12 o'clock and all, practically it is not possible for the auditor to go and visit. But my point is, whether practically goes or not, there is a provision, there's a separate section in the Companies Act where the auditor must attend the meeting. Anyway, I mean, most of the auditor, if you're not going also, you must get an exemption from the board. That's all. These are all the provisions. Now let me start. Punishment for fraud, terrible punishment for contravention. So of course, some punishment has been reduced now. If the provisions regarding chapter contravene, the company will be punishable, 25,000 to 5 lakhs an officer. If the auditor contravenes the provisions regarding appointment, duties and report, 25,000 to 5 lakhs or 4 times the remuneration, whichever is less. If an auditor has contravened the provisions willfully with the intention to deceive the company or creditors, 1 year imprisonment and fine, non-computable offense, 50,000 to 25 lakhs. So the auditors have to tighten their belt. We will now, and also the auditor, if convicted, you have to refund the remuneration, pay damages also to the company's statutory bodies and members for the loss arising of incorrect statement. I will correct this in the class action suits. Now, direct responsibility, the auditor. Right, this was the chapter. We will now move on to directors. There are a lot of sections dealing with directors. Some of the very important areas I will just look into. Small areas I have to leave it, because otherwise I cannot cover many important areas, because we are all qualified people now. We all know in a private company, minimum 2 directors, public company, minimum 3, 1% director, 1. My first question is, what are the consequences if the number of directors are reduced below the statutory minimum? Let's take the case of private company. There must be 2 directors. What are the consequences if they are reduced before? Now, no saving clause. Like in members, you had a saving clause. Within 6 months, you have to increase. No. So the legislative intention is these 2 directors must be maintained. So in case one of them dies or something, you must appoint within a reasonable period of time and leave the issue. What is reasonable period of time? Depends on facts of the case. How? I am visualizing 3 different situations. 1, number of directors reduced below statutory minimum, but quorum can be formed. Suppose, let us say, even in a private company, you have say the articles provide for a higher directors. So in a private company, they are provided that we will have minimum 5 directors. Then the quorum will be 3. So higher number in case you have. Then what is the situation? Number of directors have come below the minimum, because the articles provide 5. Now there are 4. But quorum can be formed. In this case, we don't find any problem. You convene the board meeting or even EGM directly to appoint the auditors. But the point here is, even though the board meeting is a valid board meeting, it's an irregular meeting. You cannot discuss any other item, including allotment of shares or something like that, or change of registered office. That board meeting is valid only to transact the business relating to appointment of auditors. Situation 2. Number of directors also reduced below minimum and no quorum can be formed. There's only 1 director. Number of directors reduced and no quorum can be formed. Then in this extraordinary situation, there is one provision in the articles, emergency provision in the articles, which says this 1 director can do what the 2 directors could have done. In other words, this 1 director can directly appoint without quorum another director, or he can convene the extraordinary general meeting for the appointment of directors. So this problem also sorted out. Situation 3, company becomes directorless. What shall we do? There's a provision which in the New Companies Act, which says, suppose the 2 directors resigned in a private company, or both of them died in a crash. So when directorless the company becomes, the promoters has to appoint the director. In their absence, for some reason, there's no promoter. There are many companies where there are no promoters as of now. So in their absence, you must inform the central government. They will appoint the directors. So these small provisions you must know. Now, what is the maximum number of directors? Public company, 15. In a private company, no 15. Any number of directors you can have. We are all forgetting this. But you must specify the maximum in the articles. You specify 10. Why 15? 10, 12, 8. Because it's only a finance company. Why do you spend a lot on sitting fees and other expenses? Too many cooks spoil the food. There should be necessity to have a broader board. So you can have 12, 15, but you provide the maximum in the articles. Anyway, for more than 15, special resolution will be required. That is not applicable in case of private company. Please understand that. So any number of directors you specify in the articles. Then number of directorship a person can have. Now a person can be a director not more than 20 companies. In this 20 companies, there is a rider that if it is a pure public company or a private company which is subsidiary of a public company, or private company which is holding of a public company, all this you cannot hold more than 10. So You can be a director in 15 private companies and 5 public companies, not other way around. So total, a person can hold the office in 20 companies only, because you have to spend time and effort. Then in that, not more than 10 public companies. So these provisions you have to go through. And this one very interesting point, I thought we'll just have a look at it. The members of the company may, by special resolution, specify lesser number of companies in which a director of a company may act as a director. Hey, very interesting. Very interesting. See, the law permits me to be a director in 20 companies. But there's a company which says, my policy is, I'm not talking of your capacity and capability. I'm not casting any apprehensions on your ability. My company's policy is, any person who becomes a director in my company cannot be a director in more than 5 companies, including this company. That's all. If you want to become a director, very interesting points. You can include in your articles these points. The members by special resolution specify. Or if the articles doesn't specify, the members can, by special resolution, can specify. This is our rule. So that so the Reliance Industries may say that our policy is, whoever becomes a director in our company, they must not be more than 7, more than 10, so that they spend more time into the affairs of the company. Then every person before he becomes the director must obtain a director's identification number. Then every person who becomes a director, before he must give a declaration to company. These are very small issues which you have to follow very carefully, even in private company. And the declaration must contain 1, the DIN number. Second, that he is not disqualified for being appointed as a director in the company, and the consent letter. These 3 are usually covered in that certificate. Next. There are various categories of appointment of directors in a private company, like first director, appointment of director in the AGM, additional director, nominee director, cash vacancy. In a public company, you have got some more directors like independent director, small shareholders director, and all that. Now, and also we have women director, assistant director, all that. Now, one point all of us must know, why are we classifying these categories of directors? Only to know the method of appointment and the tenure for which he will hold office. So the focus will be on these 2. The moment you say first director, oh, he is appointed in the articles and he will hold office up to such and such time. The moment you say additional director, what comes to my mind is, he is appointed a board, he will hold office up to commencement of next AGM, like that. So when it comes to duties, responsibilities, and liabilities, we don't make any distinction whatsoever. All of them are equal. This we must know clearly. Then first directors. It is usually in a private company, first directors' names are specified in the articles. Then if for any chance you are not decided who are the first directors, all the subscribers to memorandum shall be deemed to be first directors of the company. Now, in a private company, this provision also will apply. Then this rotation of directors, all that will not apply in case of a private company. Okay. So rotation of directors, 152 subsection 6, nothing will apply in case of private company unless your article specifically provide. Then our first director's route is closed. Every time you cannot appoint that 2-3 directors, then how to appoint a director in a private company? Public company, there are clear procedures. In a private company, how to appoint directors? Straight away in a general meeting, the provisions of 160 will not apply. So the method, special notice, all that will not apply. So what you do in a private company, straight away when the meeting is going on, you can just stand up and say, sir, I want to become a director of the company. That's all. The chairman will stop the proceedings and proposed by, seconded by, and that's all. If you want a specific method how to appoint the directors, then you should be governed by the provisions in the articles. So if the articles are so silent, straight away the person can be appointed. No special notice, no 14 days, no 7 days notice, no deposit of 1 lakh, all those things. So in a general meeting in a private company, how to appoint a director? You write the provisions in the articles. In the absence of any specific provision in the articles, then the proposal can start straight away and you decide the period for which he will hold office. As simple as that, to appointed directors in a private company. Then additional director. Additional director can be appointed by the board, not by MD and all, either at board meeting or resolution by circulation. And very interesting point, the power to appoint additional directors to be specified in the articles. So when you do the audit, particularly secretarial audit and all that, and the company secretaries, when they certify, they have to go through all this. Power to appoint additional director is not an inherent power. The power should be in the articles. Suppose you have two options now. Amend the articles, introduce the power. Otherwise, the framers of memorandum and articles thought there's no need to have additional directors. Let all the directors come through general meeting route only. So the articles must provide. Then, very important amendment now, a person who fails to get appointed in general meeting cannot be appointed as additional director. There cannot be a backdoor entry. Now, how many additional directors you can appoint? Existing directors plus additional directors should not exceed the maximum fixed in the articles. Not just one or two. Suppose you have your maximum, the article says 12 directors. You have 8 directors now. Another 4 you can appoint as additional directors. How long he will hold office? The Act says up to the date of next AGM. Or you don't hold the AGM up to the last date on which AGM should have been held, whichever is earlier. So by not holding the AGM, the additional director cannot take advantage of it. So you have to vacate the office at the AGM. Many private companies have seen you appoint an additional director and you don't regularize it. He vacates the office. And I've seen companies where 5 years, 10 years is continuing as a director. Very dangerous situations. So, a directly appointed director in the AGM, then let him continue in office. This is not retiring by rotation. He will hold office for certain period if specified. Otherwise, until his death and all, he will continue as a director. So, when you appoint an additional director in the board, in the forthcoming AGM, you have to reappoint him. And up to the date of AGM means what? If you go for a technical definition, up to the date of AGM means if the AGM is starting on 30th September, 29th September, midnight, 12 o'clock. But the department came with a clarification, don't disturb him, let him sleep properly. Up to the date of next AGM means up to the time of commencement of next AGM. That means if the AGM starts at 11 o'clock, he ceases to be a director at 10:59. The moment AGM starts, he is not a director of the company. That is how you have to give the interpretation. Now, usually the power to appoint additional director is given to the board. Can additional director also be appointed in general meeting? Some courts have ruled out, usually are appointed by the board, but in some extraordinary circumstances, if the articles so provide, they can appoint, like deadlock in the board. There are 6 directors, no casting vote, 3 one group, 3 another group, they are not able to appoint. Deadlock in management, or all the directors are interested. Of course, this problem will not arise in case of private company. So then probably general meeting can appoint. If the general meeting appoints, then you are only additional director appointed in general meeting. Then you will hold office only up to the commencement of next AGM. Very important case law. The power to appoint additional directors should be exercised bona fide interest of the company, not extraneous consideration. This one case law has changed the whole concept and ideology of appointment of additional directors. I'll take an example and look at it. Suppose, let us say, there are 2 groups of shareholders, A group and B group. And the public, when I say public means only the private parties. Other than this A group, B group, some people are holding 40% shares in a private company. Now, there is an understanding between A group and B group that you do one thing, I'll propose 6 directors, you support. And similarly, you propose 6 directors, I'll support. That's how 12 directors were appointed and leaving the other shareholders in dark. Is this permitted? Perfectly permitted. Companies Act talks of majority concept only, nothing wrong. Now, continue this. After some time, let us say, the two directors of Group A resigned for some reasons best known to them. Now there is a tilt in majority. Now, how to come back to the majority? Two directors in A group has to be appointed. Now you have to convene the general meeting and appoint it. Now A group told the B group, why convene the extraordinary general meeting, all those things and all that. So we'll do one thing. We will appoint the two directors as additional directors. I'll propose to our 4 directors are there. You are 6, all of us support, and 2 more directors of A group will appoint. What is wrong? The case law says everything is wrong. What does the case law say? Hey, if you are appointing any person as the director of the company, go through general meeting route. If you are appointing an uneducated fellow, a useless fellow, so long as he is not disqualified, that is the prerogative of the members. Let them decide. But on the other hand, if you are appointing an additional director, it should be in the bona fide interest of the company. Means for his qualification, experience, and managerial attainments only, you must appoint an additional director and not to subserve the group interest. Very important case law. So, not to subserve the group interest, you should appoint an additional director. Additional director should be a professional in the bona fide interest of the company. What is bona fide interest? For his qualification, experience, and managerial attainments only, you must appoint additional directors. Then, what is the position of additional director? Though we use the word additional, it doesn't mean anything. It's not like additional superintendent of police, who is not powerful compared to superintendent of police, nothing like that. Though he's called additional, I already told you when it comes to duties and responsibility, they are one and the same. All the provisions of the Act which apply to any director will also apply to additional director. Then additional director appointed as MD. There's one very interesting point. Let us look at it. Let us look at it. The office of MD is coterminous with the office of director. Means you must become a director, then only you can become the managing director of the company, coterminous. So if the office of director comes to an end, the office of MD also comes to an end. Now there is a problem. Please see. Now, suppose the person appointed as additional director as well as MD on 1st January. Now, on forthcoming annual general meeting, 3 things can happen. 1, I told you as additional director, you will the office only up to the AGM. He is not seeking reappointment. What will happen to office of MD? Even though he was appointed for 5 years, the office will come to an end as MD also because it is coterminous. You have to go home. Situation 2. On the AGM at 11 o'clock it was held. Please see. At 10:59, the additional director will vacate the office. Now he became a regular director in the AGM when we do not know. Maybe at 11:30. There is also managing director. There's a technical break in the office of MD for 35 minutes. Please follow very carefully. I was additional director and I vacated the office at 10:59 on 30th September. Then AGM started at 11 o'clock. I will not be immediately appointed, isn't it? Say after half an hour, I was appointed as regular director. I'm also the managing director, originally appointed for 5 years. Now, there's a technical break in the office of managing director for 31 minutes, isn't it? So strictly, if you go for interpretation, the office of MD is coterminous, so the office of MD also comes to a break. So you have to once again comply, not required. The department came with the clarification, no problem. Come on, he can continue as MD, notwithstanding the technical break in the office of director. So he says that why you complained of. So generally it is coterminous, but we are talking of additional director plus regular director combination, notwithstanding the technical break, he can continue. Next situation. This is what I told. Next situation, look at it. At the holds office as additional director up to 10:59. This stupid fellow at 11 o'clock when the AGM started, he did not seek reappointment in the AGM. He knows that he cannot be reappointed. He avoided the AGM. Then the AGM was over. Again at 12 o'clock, with the support of the other directors, he was appointed as director. Then he can hold office up to next AGM. You are understanding? It's a combination of additional director plus additional director. He is also managing director. The department said, I'll break your legs. You have to vacate your office. The technical break in 61 minutes, you have to suffer. Department clarification will be valid only when he was additional director and he became a regular director, notwithstanding the technical break, he can continue as managing director. So this case, additional director, then becoming additional director, the office of MD also comes to a break. You have to comply with the act once again. Then let's move on to casual vacancy in the office of director. What is casual vacancy? Due to death, disqualification, resignation, and all that. Now, here also board only has to appoint, but you have to appoint at the board meeting, not resolution by circulation. Then board appointment should be subsequently approved by the members in the immediate general meeting. This is the amendment. Casual vacancy, because of death or anyone, if you fill up as a casual vacancy, it has to be approved by the members in the general meeting. Casual vacancy in whose office? If you see the section very carefully, the casual vacancy must be in the office of director appointed by the company in general meeting. Small issues. So if casual vacancy comes in the office of first director, additional director, alternate director, because they are not appointed in the general meeting, is not a casual vacancy, it cannot be filled up in this section. Why they have drafted like this? After all, he is a first director. Then what is the need to treat as a casual vacancy? Next, additional director, alternate director. If he dies, appoint another additional director. If the alternate director, appoint another alternate director. Anyway, whatever be the logic, those directors appointed in general meeting only, if they die or resign, it can be treated as casual vacancy, which can be filled out the board, again to be appointed in the general meeting. Everywhere, if you see, they have used the word may. So additional director, casual vacancy, alternate director, not compulsory to fill up. If you want, you can fill up. Otherwise, the vacancy can remain. Regulations by the articles. See, very interesting. In additional director, the articles must specifically provide. But whereas here in casual vacancy, the wording is in default of and subject to the regulations in the articles, means the power is not derived from the articles, power is subject to articles, which means if something is told in the articles, please follow. If nothing is told in the articles, section will apply. In other words, even if the act is silent, board has got powers to fill up the casual vacancy. This is the language you find. Period of office. Unlike in case of additional director, casual vacancy director will hold office for the period original director would have held office up to that period. Now, differences between additional director and casual vacancy director, please see. See, these are all torturous areas. Why don't you simplify all this? Unnecessarily, those days, about 200 years back, the Companies Act, they are just continuing and all. Very unfortunate. But the bureaucrats will not allow simplification. See, additional director in the bona fide interest of the company, you have to appoint here casual vacancy. This can be done at board meeting or resolution by circulation. Here only board meeting. Here the power is derived from the article. Here power is subject to articles. This fellow will hold office up to next AGM. He will hold office up to the period original director would have held office. General meeting approval is not required additional. Here it is required. So we used to torture the students based on all these points. So this was additional casual vacancy. Next comes alternate director. This section also applies to private and public companies. Board only will appoint either at board meeting or resolution by circulation. Articles must specifically provide. Generally, when the original director goes abroad, not to any other state, abroad, out of India, for 3 months or more, alternate director can be appointed in his place. Now, please see very carefully. An alternate director is not a proxy of the original director. Proxy concept is not there in the board meeting. Proxy concept is there only in the general meeting. So, when the original director goes abroad, let him go. The alternate director can be appointed only by the board. Many of the collaboration agreements I've seen even in private companies, the collaborator will be there. His stakes is also involved in the company. He cannot come quite frequently to India to attend the board meeting. So what they do, the collaborator will ask, will appoint a lawyer in Bombay or Hyderabad who will be the alternate director. He will put in the collaboration agreement. Original director cannot appoint alternate director. Board only will appoint the alternate director. This you must know very clearly. Another thing, please see. One route of appointing alternate director is articles must authorize the board, then you will appoint alternate director. Our second option is general meeting by ordinary resolution cannot directly appoint. They will authorize the board of directors to appoint. What is the concession given? If the articles is not provided, you have to amend the articles. For that, special resolution is required. Instead of special resolution, general meeting by ordinary resolution can vest this power. Every time general meeting need not pass ordinary resolution for appointment of every alternate director. Once the power is vested with the board, board only will appoint the alternate director as such. Can general meeting appoint? No, I told you it is only the board will appoint the alternate director. Right. I'll discuss some very interesting issues in alternate director. Alternate director can be appointed only when the director is absent for 3 months from India. There are many issues. First issue is practically how will you interpret the word absent from India? I'll look at a situation. On 1st January, the original director told the board, I will go abroad for more than 3 months. Then the board said, all the best, fine. Then he left abroad on 1st January. And on 2nd January, in his place, alternate director was appointed by the board. Now continue. The original director went abroad and he told that he'll be absent for 6 months. He went to abroad and stayed with his son for 1 month. Unfortunately, the daughter-in-law, after 1 month, told, get lost. Then the poor fellow came to his daughter's place. Son-in-law told him the same thing, get lost within 15 days, probably in a polite way. Now, 1.5 months only over, there was no alternative. The original director came back to India. What will happen to alternate director? He will vacate his office. That is not the issue. What is the locus standi or propriety of appointment of alternate director itself? What is the validity of appointment of alternate director itself when the original director was not physically absent out of India for 3 months? Department came out with the clarification. No. His absent out of India does not refer to physical absence. His intention to be absent is only a prerequisite to form an opinion. So even if he comes back within 1.5 months, he was not physically absent, the appointment of alternate director is perfectly valid. Okay. Then one more issue, absent from India. How do you give the interpretation? Absent from India. Now, please see. Can you appoint alternate director for a NRI director or foreign director? No, no, and no. Many of us do not know. Collaboration agreements we are doing left and right. Alternate director can be appointed only when the director is absent from India. He has used the word absent. He didn't use the word go out of India and all. Absence is the opposite of presence. Then one more wording, if you see, how long this alternate director will hold office? During his absence. How long he will hold office? He returns to India. Combine these two words, absent from India returns to India. He didn't say coming to India and all. So there is a prerequisite for appointment of alternate director that the original director normally stays in India and is now absent from India for 3 months or more with the intention to return back to India. NRI director never stayed in India. Foreign director never stayed in India. It doesn't comply with the requirements. So I repeat 1,000 times that an alternate director cannot be appointed in place of a foreign director or NRI director. Who is reading all this very carefully? Blindly for NRIs, we are appointing alternate director because he's not coming and all wrong. Because the wording is so clear, he is absent from India and he will come to India. So only for those usual residents, you can appoint alternate director. So for NRI director, foreign director, you cannot appoint alternate director. Then this another wording, there was a lot of confusion. Suppose let us say A, B, C, D, E are original directors. Now, can F be appointed as alternate director for 2 directors, A and B? A has also gone abroad, B and also has gone abroad. F, can he be appointed for 2 people, 1 fellow alternate director? In the previous act, it was all permitted. Now, after the amendment, they made it very clear, 1 for 1. And another point is, one of the existing director, can you appoint as alternate director? That is also not possible. So both has been very clearly said. So a director cannot act in dual capacity for himself and alternate director. So for A, B, C, D, E, A has gone abroad. F only can be appointed a new person. And also, once you are an alternate director, you can represent 2 original directors. So this is very clear, 1 for 1 only. In the previous Companies Act, we had a hell of a lot of problems here. One stupid clarification was there by the department. Yes, sirs, you can appoint the same person. Then how about my voting? I'll raise the left hand and say, this is for director A, this is for director B, stupidity. And the department says, sitting fees, you sit only once, will pay. All the problems are sorted out. Now 1 for 1 is very clear. How long the alternate director will hold office? Not longer than permissible to the original director. This is very important. That means original director went abroad. He resigned. What will happen to alternate director? Vacate your office, co-terminus. Original director went abroad. He was removed in India. Alternate director also comes to an end because he's a co-terminus. Original director went abroad. Then he died. Alternate director need not die. You have to vacate your office. That is one thing. Up to the period, not longer than permissible to the original director. Second, the moment alternate director returns to India, the moment he comes to India, for example, he went to Dubai and the flight came to Dubai. From Dubai, it landed at Hyderabad International Airport at 3 o'clock in the evening. Alternate director was there and he was attending the board meeting. The moment the original director telephones the registered office and says, I've come, alternate director has to vacate. Co-terminus, come on, run. That was the clarification. But there's a case law which says, no, don't give that kind of interpretation. In the case law, he said, the original director should come to India for some period of time, not with the intention of not temporary period to attend the board meeting and all that. So for 1-2 days, if he comes and goes back, the alternate director can continue. So these are very interesting points you find. What is the status of alternate director? Already told you is not a proxy. All the provisions of the act independently applies to alternate director. Again, you have to file DR2, DR12, everything. So for the liabilities of original director, alternate director is not responsible. For the liabilities of alternate director, original director is not responsible. So alternate director also has to comply with the provisions of loans to directors, related party transactions, everything. Now, video conferencing is allowed. This is one problem today. Now, original director went abroad. Alternate director also is there. Now, alternate directors attended the meeting. Video conferencing, original director is also attending. Who will be permitted? Alternate director only has to be permitted, because he is the real director now. See, these are some of the issues the Companies Act has to address. You are introduced technology, you are allowing electronic voting, video conferencing, all that, but many issues you are not clarified. But anyway, these are questions which we give in CA. In a case where, because as of now, alternate director is the recognized director. So even if you participate, come on, you will not be counted for quorum, but you will not throw him away, let him participate. His presence will not consider. Then appointment of alternate directors, MD, nothing wrong. You can appoint alternate directors, managing director, but only problem is once the original director comes back, alternate director comes to an end, he will also vacate. But very important point is, when the original director went abroad and the alternate director was appointed, original director was MD, alternate director will not automatically become MD. If you want, you can appoint him again as MD. He's not stepping into the shoes of that position. If original director went abroad, is not MD, alternate director was appointed. Can you appoint alternate director as MD when original director was not so? Yes, yes, no connection. Then resident director. Now, what has happened is, there are a lot of foreign subsidiaries and holding companies in India. Holding company and subsidiary company of foreign companies in India. Now, most of the directors are foreign directors, they never come to India. And a lot of violations take place. When ROC launch a prosecution, they are not able to find any director in India. So now, for all the public and private companies, they are saying that at least one director must be a resident. The definition of resident is, during the financial year, they should stay in India for 182 days, at least one director. This is only because we will be able to catch one fellow at least in India. Then nominee directors. Now they have made a provision for appointment of nominee directors also. The board will appoint the nominee director, and there must be provisions in the articles. Or board can appoint in pursuance to law or any agreement. There are no provision in pursuance to agreement or by the state government. Nominee directors can be appointed. Then the principle of proportional representation. What is this principle of proportional representation? Now, this is applicable even for private companies. What is this principle of proportional representation? The present Companies Act has two problems. One, 51% majority concept. That group which holds 51% shares, they can appoint and remove all the directors, and that group holding as high as 49%, unfortunately, are not in a position to appoint or remove any director. So minority interest is not protected in the present Companies Act. Two, group interests are not protected in the present Companies Act. Now, please see the slide. Let us say there are 5 groups of shareholders, each contributing 20%, and then there was an understanding that each will appoint 2 directors. That is how 10 directors will be appointed. Can you sustain this agreement in the present Companies Act? No. If ABC come together, they hold 60%, they can throw out D and E, the 2 directors. Because majority, how the directors are appointed, removed by ordinary resolution in general meeting. So group interest is not protected. After some time, what happens? Come on, these musical chairs. So one fellow will shift to the other group. Then what happens? C, D, E come together. They will throw out directors of A and B group. So group interest cannot be protected. These are the 2 problems in the present Companies Act until what we had discussed. Minority interest cannot be protected. Group interest cannot be protected. But if you adopt the principle of proportional representation, and if the articles provide, directors can be appointed by the shareholders in proportion to the shares held by them. Directors can be appointed by the shareholders, one sentence, in proportion to the shares held by them. Suppose, let us say, 12 directors are to be appointed. I am holding 25% shares. I can appoint 3 directors. Here also majority. That fellow holding 51% only can appoint 7 directors. But here minority interest is also protected. Group interests are protected. For example, may give an example, 10 directors are to be appointed. And if you hold 20% shares, 2 directors you can appoint. So this is the principle of proportional representation to give effect to group interest and minority interest. Then he says, notwithstanding anything contained in this act, if there are some inconsistent provisions in the Companies Act, then this section will override those inconsistent provisions. So many companies, many companies, the promoters come and tell me, sir, we are a private company, he holds 20%, he 33%, 33%. Then you write in the articles, we cannot be removed from office and all that. Then the chartered accountants, company secretaries, advocates give the reply, no, if you hold, we can. Go for principle of proportional representation. Ask them to say, so long as you hold 33% of the shares, you cannot be removed. The principle of proportional representation. And it is now applicable to public aware premises, articles must provide. Not less than 2/3 must go under the principle. What is he saying? Suppose there are 12 directors. Better you appoint all the 12 under the principle. Otherwise, minimum 8 must go under the principle. What about the remaining 4 directors? What about the remaining 4 directors? In the remaining 4 directors, you can write as per the articles. They need not go into the proportional representation. You can say 2 will be additional director, 1 will be nominal director and all that. Then they will hold office for 3 years. You can't remove them within this period of 3 years. So they are almost permanent director for a period of 3 years. Then after 3 years, what will happen? The process will start again. Then again, they'll be appointed for 3 years. This is the principle of proportional representation. In the meantime, if there is any casual vacancy, what will happen to the casual vacancy? The board will fill up. How long he will hold office? Up to the period the original director would have held office. This is called the principle of proportional representation. So when group interests are there in the Companies Act and you want to protect some minority interest, come on, you can go amend the articles and go for the principle of proportional representation. Now, in the present Companies Act, for a public or private company, there is no share qualifications, there is no professional qualification, everything has been removed, anyone can become a director. Okay, so all this is not there. Now, disqualification of director and vacation of office of director. A director disqualification, what is the difference between these two? Because most of the point in 164 is repeated in 167. Disqualification will arise at the point of appointment of director. Once I become a director, don't look at 164, look at 167, vacation of office of director. This is the technical difference. That is why most of the points in 164 is also repeated in 167 and some additional points are given. What are the disqualification? Is of unsound mind. In India, if 2 people come together, 2,000 ideas will come. When a person is of sound mind itself, dealing with him is so difficult. So unsound mind, he cannot take rational decisions, what he will do as a director. And court only will declare a person to be of unsound mind. That is very important. Next, he is undischarged insolvent or he has applied to be adjudged as insolvent, application is pending. This, many of us have not understood this. Let us practically understand. What is insolvency? When my liabilities are more than assets, I made an application to the court to be declared as insolvent. The language now tells, suppose he made an application on 1st January. The court will take their own sweet time. Say on 31st December, he was adjudged as insolvent. Once he is adjudged as insolvent, the official assignee receiver comes to his house, take control of all the assets and pays off all the liabilities and all. Now, this is called undischarged insolvency period. Undischarged insolvency period covers the time taken by the court to sell all the assets and pay the liabilities, and thereafter the court will say, because of the magnitude of the insolvency, don't do business for next 3 years, 5 years, 7 years, like that. So all this period is called undischarged insolvency period. Now please look at this example. Now, in my example, for 11 years, he cannot become the director. See, I made an application to be adjudged insolvent, application is pending. So 1 year, he made an application, then undischarged insolvency period has started. 3 years, the time taken to sell the assets and liabilities, I've taken some figures, that's all. Then 7 years, the court restraining from doing business. So the net effect of these wordings is, he has applied to be adjudged insolvent, application is pending. Undischarged insolvent means for 11 years, he is not fit to do business. Fair enough. You don't have a business acumen. You are insolvent. When you deal with the public money, what the hell you will do? You are not fit to be a director. Then he has been convicted by the court for offense involving moral turpitude or otherwise and sentenced to imprisonment 6 months or more. 5 years has not elapsed after the expiry of the sentence. We don't want rogues and ruffians and scoundrels managing the affairs of the company. There is law. Convicted, not arrested and all. Judgment has to come by court, not tribunal and all. Offense involving moral turpitude. Offense involving moral turpitude means he had an intention to commit the crime. Mens rea was proved in the court of law. Or otherwise, even moral turpitude not there, or otherwise he is added now. And for a single offense, he was convicted at least for 6 months. And after he was convicted for 6 months, then for next 5 years also, you cannot appoint him. After 5 years, after the ending the conviction, you can appoint him as a director. Now, or otherwise means, there's a clarification, any offense under the Companies Act or previous or present Companies Act. Previously, only offense involved moral turpitude, only criminal offenses, where he knows the offense. But now he says, or otherwise means, if you have been convicted of any offense under the Companies Act, you cannot become a director for next 5 years. Then another point, a person who is convicted of offense sentenced more than 7 years is ineligible, lifelong. Now Ramalinga Raju judgment is said to come. Assuming that Ramalinga Raju is convicted for 7 years or more, the story is over. In his lifetime, he cannot become the director of the company. Then an order has been passed by the court disqualifying, and the order is in force. Any order under any legislation, the court said you are not a fit person to become a director. You cannot become a director until the order has been withdrawn. Then you are not paid the call money on shares. Why? Yatha Raja Tata Praja. Why you did not pay the calls on shares? You have no confidence in the company. 10 rupees share is quoting 3 rupees. Hell with it. Already paying 3 rupees is a crime. 5 rupees I have already paid. I will not pay the balance money. Oh, very good. You are offered directorship. No, sir, I would like to. It cannot correlate. A person who has no trust and confidence in the company, by not paying the call, how can you become the director? I give you 6 months time. You have to pay the call. If you are holding some shares, if you are not holding the shares of that company, no subject of discussion. Then disqualification. You have been convicted for related party transactions. Probably tomorrow we'll be discussing related party transactions. Serious provisions. They will apply even to private company. All the punishments are given in related party transaction violation. So once put it the positive language, once he is convicted for next 5 years, you cannot become a director if you are convicted for related party transaction. Then you are not obtained the DIN. That is also a disqualification. Then number of directorship is restricted to 20. If by any chance more than 20 you hold, you are disqualified from being appointed as director. Now, one very important disqualification, 164(2)(a), 2(b). Let us understand very clearly. 164(2)(a) says there are two separate disqualifications. It says every company, as you know, has to file financial statements and annual returns with ROC. Financial statement within 30 days, annual returns within 60 days of the AGM. Now, the company in which you are a director, whether private or public company, has failed to file financial statements or annual returns for 3 years. So 6 documents. So 3 consecutive years they are not filed. It is a disqualification. 1 year you filed, 2 years you did not file, then 1 year you filed both the documents, then you can continue as a director. So though they are punishable by penalties and all that, this is a very serious issue. What is the seriousness of the issue? They have not filed the financial statements and annual returns for 6 years. For 3 years, 6 documents. Come on, you are disqualified. Here he says disqualified means what? Hereafter, you cannot be appointed as the director in any other company or reappointed in the same company. Fair enough. What about the existing companies? When I go to 167, I'll combine it. The net effect will be you are violated. Annual financial statement, annual returns was not filed for 3 years. The net effect is, if you combine 167, please see very carefully. You are a director as on the date in the defaulting company and some other private or public companies. First, vacate your office. First, vacate your office in the other companies other than defaulting company. In defaulting company, you can continue because otherwise it will become directorless. And because of 164, you cannot be appointed reappointed in the defaulting company or any other public-private companies. I repeat again. You have entered in this default. What is the effect? In the defaulting company, you please continue. That he has told in 167. Because I don't want to become a company as directorless, all of them vacate. In the defaulting company, you can continue only for the existing tenure. Then you please vacate your office in all other private public companies other than defaulting company, even though you are defaulted in this company. Second effect is, for next 5 years, you cannot be appointed as director in the defaulting company as well as any other public-private companies. That is the effect of it. Of course, as on the date of default, you should have been a director for 6 months or more. Otherwise, for that particular director, it will not apply. Second disqualification. You have been a director of the company which has failed to repay the deposits or interest thereon, or redeem the debentures or pay the interest on the due date, or pay dividends, and the default continues for 1 year or more, shall not be eligible to be reappointed for 5 years. Same thing. Here, what has happened? What are all the defaults which the company has committed? Non-repayment of interest on deposits and repayment of deposits, interest on debentures, non-repayment, dividend declared but not repaid, and 1 year time is given here. If you rectify within 1 year, excellent. If you don't rectify, same thing. You can continue in the existing company for the existing tenure. Please vacate your office. In all other than defaulting company, private or public companies, please vacate. And you cannot be appointed as a director in the defaulting company or any other public-private company next 5 years. Of course, as on the date of default, you had been a director for less than 6 months, this disqualification will not apply to them. Then default to banks, financial institutions is not covered. Then failure for 1 year or more, this you have to observe. In respect of 164 2A disqualification, from the date of disqualification, here 1 year time is given to rectify. Now look at a practical situation like this. I am a director, let us say, I am talking 164 2B disqualification. Situation 1, I am a director on 1st January, situation 1, yes means I am a director as on the date of default. Then effective date of default also I am a director. That 1 year is over. Situation 2, as on the date of default, I was a director, but I resigned within 1 year. On the effective date, I am not. Third situation, as on the date, I am not a director on the effective date. So fourth situation is a combination of second and third. I was a director, then I resigned in between, and again I was appointed as director as on the date I was a. Now, in which situation? Only in the first situation, it will attract the disqualification. If you put in proper language, please see, 164 2B will be attracted only when the default continues for 1 year or more. If the default is rectified within 1 year, no subject of discussion. And he was a director as on the date of default and continued to be a director on the effective date of default only, it will attract the disqualification. So these are all the issues which you have to carefully look into. And some more things. As I told you, you have to vacate the office in respect of, that is given in 167. You shall vacate the office in the defaulting company as well as every other public or private companies. Who can relax the disqualification? No relaxations. They are absolute disqualification. Neither the company nor the central government can relax any of the disqualifications. And in a private company, you can provide for additional disqualifications, which no one is doing. You can provide qualifications in a private company in the articles. You can provide for qualifications in the articles. Take advantage of it. You can say, unless you are an engineering graduate, you cannot become a director of the company. Unless you have 20 years experience, unless you are 21 years, you cannot deposit requirements. Unless you deposit 25 lakhs, you cannot become the director. Fine. In a private company, we are not just doing, talk to the promoter. Anything apart from that also can put. By implication, public company cannot put additional disqualification. Filing of appeal. See what happened in those convictions and all that. In the convictions and all, is punishment has come, but I have filed an appeal. Then will the disqualification be there? Yes. Even if you have filed an appeal, it doesn't matter. In appeal, conviction is not gone. Only the punishment has been stayed. Can a minor become a director? No. Because minor has to file the consent with ROC, both public and private companies. Filing a consent means entering into contract. So straight away take the stand. Minor cannot become a director of a public or even private company. Vacation of office. First point you must know in vacation of office, unlike in case of removal, no procedures and all. The moment that the event happens, you have to vacate your office. Vacation is automatic. No principles of natural justice, no opportunity to be heard, no board meeting, no board taking cognizance of the situation, filing, all that is secondary. So once the event happens, you please vacate your office. In fact, in one case, what he said, the board has no power to waive and all, no resolution. In one case, what happened? The fellow had a doubt whether he has vacated the office because of this reason. He went to the court. The court said, first you vacate your office, then come to us with a direction that you can continue as a director. So stringent is the provision that all those 10 circumstances, whatever he discussed, you have to vacate your office. Plus the other circumstances. Then he absents himself at the meeting of the board during the period of 12 months with or without leave of absence. Very, very important. Absenting to the board once or twice is fine. It cannot be on regular basis. So last board meeting, whenever you have attended, from that date, 1 year. Continuously you have been absenting for 1 year, please vacate the office automatically. With or without leave of absence. Previous Companies Act, I informed the board I am absent. No. Then you will not vacate. Now he has removed all this. So, and if original director went abroad more than 1 year, this is a problem for him. He has to come back within 1 year. No one can waive this disqualification, no waiver. So your absence, I repeat, you are a director within 1 year, you should attend at least one meeting. Then from that meeting, 1 year. Then the onus of proof vests with the company. There are many case laws on the subject. They said, because most of the companies are using this as a shortcut method for removal of director. They are saying that we held the meeting, you did not attend the meeting and all. No. The onus of proof vests with the company. Company has to prove the meeting was held. They have sent the notice. Director received the notice and he did not attend the meeting. If you cannot prove, it is proved that the director will attend the meeting. And then He is in contravention of 184. 184.1, 184.2. When I go to disclosure of interest, we'll discuss that. 184.1 subsection 1, general disclosure if you don't make. 184 subsection 2, specific disclosure if you don't make, vacate your office. And then tribunal has passed an order. Then he is convicted, moral turpitude for 6 months. This was already there. Why we have repeated? We have repeated because their 5 months, 5 years has not elapsed. That point is not there because he's already a director. Now the conviction has come. Please vacate your office. And then here, if you have filed an appeal until the disposal of the appeal, you can continue as director because already you are a director of the company. This is the position. Or is removed from the provisions of the act. See, removal of director, there's a separate section. Then how do you connect this? Having removed under the section, still if you try to continue in office, vacation of office will come into picture. Or he has been appointed as director by virtue of holding office employment in the holding and he ceases. Now, for example, financial institution nominee. Because he is a nominee of the financial institution, because he is employed in the financial institution, he was appointed. He has resigned from the financial institution. This automatically comes to an end. Or another example, let us say, he is a finance manager. He was also appointed as director. If he retires as finance manager, office of director also comes to an end. So these are all vacation of office. Penalty, very severe. See, having vacated the office, if you still continue as a director, penalty will be imprisonment of 1 year and penalty 1 lakh to 5 lakhs. Then promoters, there could be a situation where all the directors may vacate the office and company will be rendered directorless. Then the law says very clearly, promoters will appoint the directors. If there are no promoters, central government will appoint the directors. In a private company, just like you can provide for additional grounds for appointment of, additional grounds for disqualification, additional grounds for vacation also can provide. But they should be very reasonable. For example, you can say, if you withdraw the 25 lakhs which you are deposited in the company, you will vacate your office, fine. Now, there's a department clarification. It says, in the guise of providing additional grounds for the vacation of office, you should not provide a shortcut method for the removal of the director. You cannot put a clause, any director can be removed by the board in the bona fide interest of the company. Those are vague clauses. If you want to remove a director, you have to follow the procedure given 169 removal of directors. You can't use 167 as a shortcut method to circumvent the provisions of 169. So because you have been given additional grounds, you have to carefully use the additional grounds. Resignation of director. See the provisions clearly. Notice in writing, no oral resignation, no talak and all. Hey, these points were not there in the previous Companies Act. No provision, we had a lot of problem. In one company, in the board meeting, one director was not seeing eye to eye. Other directors were getting irritated of him. In every board meeting, he creates some problem. In every board meeting, he creates some problems. In every board meeting, he creates some problem. So he was explaining one proposal. The other director said, no, all this is not possible. He said, I have not even made the proposal. Okay, tell me. Then when he started telling the proposal, other directors told in chorus, all that is not possible. Then what I was sitting in the meeting, he said he took all the agenda papers in his hands and just threw on the table. If this is the attitude of the other directors, there's no point in my continuing. Then one of the director, pouring more fuel to the fire, he said, are you resigning? This upset the other director so much. He threw all the papers, got up and said, you take it in whatever way you want. And he left the hall. The other director was offended by this behavior. He looked at chairman and said, record his resignation. Then the chairman looked at me and said, Jayaraman, is it resignation? I said, yes. You construct the sequence of event. Those days, oral resignation was valid. Talak, bol diya bas. All that cannot happen now. Notice should be in writing. Board will only take note. Acceptance of resignation is not required. The relationship is different. And inform the ROC within 30 days, DR12, put in the website, specifying the director's report. These small things we are forgetting. 5 things you have to do even in a private company. Notice should be in writing. Board has to take note. It should come to the information of the board. Then the board has to file DR12, then put in the website of the company and then specify in the director's report. The resigning director also may forward, not compulsory. So the DR11 you can file with ROC within 30 days. It's not compulsory. To be on safer side, because there may be some instances if the company does not file DR12, now the public may be in the impression, or anyone may be in the impression, even Creta suppliers, I am the director. I don't want that to happen. Then resignation will take effect from the date of notice which is received. That's all. No acceptance of resignation and all that. Then if all the directors resign, yes, they have inherent right to resign. Then the promoter will appoint the director, or the government will appoint the director. Resignation of MD whole time, very important. When you are resigning as a director, you have to be very careful whether you are resigning as MD as well as director or only as director. When you are resigning as MD, come on, there's an employer-employee relationship. Acceptance of resignation and relief from the duties is very important, though not specifically told in the Companies Act. We'll now move on to removal of directors. While there are various methods of appointment of directors, when it comes to removal, the absolute section is 169. Private companies also have to follow this section for removal of directors, no exemption for them. In the previous Companies Act, it was different. Just pass ordinary resolution and throw out any director. And these directors cannot be removed. Those appointed in the principle of proportional representation, tribunal directors, if the oppression mismanagement was there, they were appointed. Then financial institution nominee directors cannot be removed. Except for this, any director can be thrown out. First directors, general meeting directors, casual vacancy, additional directors, everyone can be removed in this section. So there's no concept of permanent director in the Companies Act. If at all there's a permanent director, it's only the principle of proportional representation. He can be a director for the period of 3 years. Special notice is required for removal. Means a director should not take any initiative for removal. So 14 days before, some meeting was convened, and 14 days before the meeting, the specified members must give a notice to the board. I want to remove Jairam as the director. And in turn, what will happen? 7 days before the meeting, the company will give the notice and the matter will shift to AGM or EGM. After the regular ordinary business, special business, the matter given the special notice will be taken up. If you pass the resolution, he stands removed. So provisions of special notice you have to comply with. Then they need not give reasons in the LIC versus Escorts case. Board should not take the initiative. Initiative must come from the members. Principles of natural justice, opportunity to be heard. Please see. The copy of the special notice must be given to the director who is sought to be removed. He has a right to make representation not exceeding reasonable length and request the company, please send the representation to all other members. Then, after that, he has a right to make representation. Such a representation need not be sent or need not be read out if he goes to tribunal. If the tribunal is convinced that the powers conferred in this section is abused to secure needless publicity for defamatory matter. Notwithstanding the right to make representation, he has a right to attend the meeting and speak thereat. Don't you think there is a conflict? At one end, he says this is a commercial organization. The directors hold office at the mercy of the shareholders. The moment the shareholders have lost confidence in the directors, call me in the extraordinary general meeting, convene the meeting, pass ordinary resolution and throw him. Why all this hangama? Principles of natural justice. Copy of special notice must be given to the director. This director will make a representation request to be circulated. The representation was not sent because received too late. It should be read out at the meeting. Very interesting. In big companies, when you have got 200 members and all, what is the cost of forwarding the representation? Or at least if you are given it immediately, I could have sent along with the 7 days notice. So there is no compulsion on the part to send the representation to all the members. Then you read out the representation. See, in life I have learned one thing. It takes you years and years, brick by brick, to establish your goodwill. If your goodwill, if it falls, it will fall like a pack of cards. In service industry, one as a practicing secretary, the other as a faculty. I've experienced this. I'm always afraid of a student, even after 30 years of teaching, because student is one person who has no ego. He will listen to the class just 15 minutes, not more than that. He may not know the subject, and he will pass judgment. Are waste ra. Evo kathal cheptunnadu ra vadu. The same student, if he is happy with the faculty, he will sit on the floor and listen. So it takes years together to build your goodwill. So also in practice, in the service industry. So therefore here, what I'm trying to say is, you throw me as a director, doesn't matter, but listen to me. You can't throw me out like this. My name and fame is affected in the market. So therefore, representation. She may write, some unscrupulous persons are spreading rumors in the market. I have siphoned away 25 lakhs of the company. The facts of the case is under 1, 2, 3, 4. Fine. You remove me. First you listen to me. Then you remove me. That is your company. I'm not bothered. Next. If a presentation need not be sent or read out, if the rights conferred in the abused is secured, needless publicity for defamatory matter. Only Britisher can draft like this. Rights conferred is abused to secure needless publicity. See, that fellow, instead of defending himself, is writing some nonsense. Osama bin Laden was hiding at the registered office of the company before he was sent to Pakistan. The company has evaded lakhs and crores of rupees of taxes in the form of TDS, GST, some customs and all that. Damage done is done, isn't it? Then you can go to tribunal and get an order. Once you get an order, you need not read out and members. But notwithstanding the right to make a representation, he has a right to attend the meeting and speak thereat. Sir, then you will speak nonsense in the meeting. No. In front of the members, if you speak, they are not going to keep quiet. These are the principles of natural justice. So this is a crying ceremony. Give him an opportunity. Then, fourth, the matter will shift to AGM or EGM. After the business, they'll take the special business. If there are no takers for his crime, resolution is passed, he stands removed. Of course, the same vacancy can be filled up if they are given general notice. Right. Then, how long this new fellow appointed in his place will hold office? Till the period the original director, who, if he has not removed, was holding office. However, if he is MD, whole-time director, he has a right to claim damages. So I told you, in removal of directors, those appointed under the principle of proportional representation cannot be removed. Only those appointed under the principle, if all are appointed, for example, I told you, if I taught 12 directors, 8 was appointed under the principle, only those 8 cannot be removed for a period of 3 years. Removal as MD, very interesting. 169 talks of removal him as a director. So if he is a MD, you have to be very careful, because as a MD, if you remove him under 169, office of director comes to an end, office of MD also co-terminus, both the office will come to an end. You have to be very careful. On the other hand, you want to remove him only as MD and he wants to continue as a director, don't go near 169. The board themselves can remove the person as the managing director. Very important point. Civil court interference. Why I talk more about the procedure is, courts normally will not interfere in the matters relating to removal of directors or appointment. If you appointed some stupid fellow as the director or remove them, it is your problem. These are all corporate democracy. court will interfere if the procedure for removal of directors are not followed. That is why you as a company secretary or a chartered accountant, you have to follow the procedures in small companies. And the court will interfere. Then duties of director. So I think it is already 8 o'clock. I'll continue this tomorrow. So I request the organizers to come. Any person at the Vijayawada branch? Okay, then. Thank you very much. Maybe they are a bit busy. We'll meet again tomorrow, sharp evening, 6 o'clock. Thank you. Thank you once again. Thank you, one and all. All right.
Sir,
Yes.
good evening once again. Sorry, I missed in the opening session. Really good. And thank you very much for the excellent session on the directors and their powers. And we call it for the day, and we'll be joining tomorrow sharp 6 o'clock.
Thank you very much, sir. Thank you.